Okay, everybody, it's me, Gregory Mannarino. And you know something? I missed you. I really did since this morning, and we have a lot to talk about. So, yes, we made it through another freak show of a week, and it ended on a freak show note. So, let's talk, you and me, on this lovely Friday. The stock market took a hit today. Really? Stocks can fall? Yeah, they fell. But mark my words here and right now, it will not last. We will talk about what drove the market lower today. I think most of you probably have an idea. Comments from Janet Yellen, not once, but twice, on the economy. The market just doesn't want to hear anything that could possibly be negative, but hold that thought just a little bit. So yes, stocks finished lower. Gold and especially silver got hit hard today. Okay, they're going to play their game, people. We're going to play ours. We're in an environment of obviously rapidly rising inflation. Don't listen to Greg Mannarino anymore. Listen to Janet Yellen. That's part of the reason why the stock market took a hit today. Are her calls of inflation rising rapidly for several months. The market doesn't like to hear that. Clearly, consumer sentiment fell off of a cliff. Would you be surprised with prices rising all over the place? Oh no. Powell, yesterday, Yellowstone Powell himself said, inflation is contained. How about it's not contained to anything? And we know this word. We've heard it before. Ben Bernanke, it was contained, the whole subprime disaster. Oh, it's contained. How about it was not contained? Inflation is not contained. And if you were to turn on literally any of them, Fox Business, Bloomberg, any of the financial channels, say the narrative is very, very simple. They're pointing at two things that I said would happen months ago. Number one, they're pointing towards supply chain disruptions for shortages, and that's why we're seeing inflation. They're also pointing towards energy. Energy, people, keep this in mind, what I'm about to tell you. The energy sector of the market has put on 30% this year alone. So that's what they're doing. Oh no, it's not the Fed. Look over there. It's energy. It's the cost of energy. That's what's driving inflation. Oh no, it's supply chain disruptions. I told you this was going to happen before it did. Okay, from months ago. So that's where we are, and is not going to change. But the Fed will continue to run their inflation creation machine faster and faster and faster with no end in sight, people. Okay, so I told you about the market today. We sold off. Two sets of comments from Janet Yellen. Number one was earlier when she said that inflation is going to rise rapidly for the next several months. You see, this is contrary to a lot of the stuff we've been hearing. You remember it was supposed to be temporary or transitory, then it was going to miraculously go away. But now, according to the Federal Reserve, not even Treasury Secretary Janet Yellen, we're going to continue to get inflation, but then it's going to ease. It's going to just kind of ease somehow. How about no? There's no end in sight here. So that was number one. Janet Yellen making that statement about inflation rising rapidly. Okay, we've already seen it as a matter of fact, we've seen a historic run higher. So that comment, the market didn't like. Number two out of its mouth, Janet Yellen, talking about possibly shutting down segments of the economy yet again, because our economy is so strong, shutting down segments of the economy because of this new, I'm not even going to say it. I'm going to spell it, but I think you know what it is. Ready? The new strain going around, okay? You can't say these things anymore. I don't know why, but YouTube doesn't like it, so we won't say them. You got it? So the market did not want to hear about shutting down the economy yet again. So those are the factors today that really weighed on. Oh, there's another one too. Rising tension between the United States and China. I don't know how many of you even know this is true, but it is happening. The United States is sending tons of military equipment over there. Warships, planes, all kinds of things. So, there's some saber rattling. The market doesn't like that either. But trust me on this, the market will shrug it off. As a matter of fact, some kind of a conflict, if it were to occur, between China and the United States would be massively bullish for the stock market, massively bullish. So just be ready for that too. So let me go back to my little lovely notepad here. I already spoke about Janet Yellen talking about rapidly rising inflation and her second thing, which was about possibly shutting down parts of the economy. I already told you all day long, blaming so-called shortages and energy for the rising inflation that we're seeing. Remember, it's not the Fed. It's these other things. Remember that, okay? Consumer sentiment cratering, U.S.-China tensions. And then, look, I have a few more things here, but I don't even want to talk about that anymore. I think you got the story. You know where we are. You know what to listen for. I talk about this all the time. People, how do I say this again without, repeating myself? But to me, I see abounding opportunity. Let's talk about that for a moment. So gold and silver got hit today. Silver especially got hit today, dropping like over 2%. We know how this works. This is not physical silver changing hands that's driving the price here. This is the derivative. Okay, now in this upside down market, when you have the largest bank on the planet rigging the derivative, and this is JP Morgan, everybody knows about it. It's no secret. The commodities exchange, they know about it. They won't do anything, okay? Despite surging inflation, $1. I want you to think about this. What did we find out just the other day? The U.S. dollar's purchasing power has now cratered to a 39-year low. This is why we're seeing historic inflation right now. But remember, you got to look at energy. It's energy. Oh, and it's supply chain disruptions. It's shortages. Yeah, shortages. Yeah, we both knew, you and I, that this is exactly what they were going to do. They were going to blame energy and supply chain on what we're seeing now. It's not the Fed. Remember, you're not allowed to know the truth. If people really understood the mechanism here, what's going on across the entire financial sector, how it's run, how it works, people would literally be out on the streets with pitchforks, but they don't have no idea. They have no clue that, for example, with regard to precious metals, the actual asset derives value from the derivative. And this is how banks like JP Morgan can do anything they want. They can pull it this way, they can pull it that way, they can push it forward, they can pull it. Doesn't matter. There is no price discovery at all. So knowing that in this environment, it's a no-brainer, people. You know exactly what you should be doing. Betting against the debt, becoming your own central bank. A lot of the action that we've been seeing lately on cryptocurrencies, you have to understand, if you look at the entire market cap of cryptocurrencies in aggregate, okay, and how they are traded, it's nothing like, let's say, Microsoft or Amazon. So it's very easy for the banks themselves to play games with cryptocurrencies. They can pull it also any way they want to. That's the truth. There's no price discovery there either, in my opinion. However, I do see opportunity. And you know that I remain a bull when it comes to cryptos. And I will remain a bull until we get real regulation here in the United States. Then I will change my perspective. Until that time, I will remain steadfast in my opinion. And, we'll see how that plays out moving forward. But I haven't been wrong. I haven't been wrong yet, telling people to buy Bitcoin at around 3,000. It's 10 times that right now. The only crypto I am underwater in right now is Dash. I own most of the big ones. You all know that. Anyway, look, we're going to continue to play the game. They're going to play it their way. We're going to play it our way. And there's opportunity here for you and me. With regard to this market falling today, this dip won't last. It's going to get bought up. Okay, the Fed is not going to stop inflating. You want to know where the stock market is going to go? Just go to the Federal Reserve's own website and look at their balance sheet. Okay, the higher the Federal Reserve's balance sheet goes, the higher the stock market's going to go. Along with crude oil. Crude oil today finished about flat. I know Jim Cramer called the top yesterday. I say he's dead wrong. We'll see how that plays out. And essentially that's it, people. Look, you know exactly what's going on. Not only do you know what's going on, you know what to do about it. And that's really what this blog is about. Understanding the situation so you can put this together and say, okay, these are the things that I need to do to moving forward here. Play this market. You know that. Stay long this market. You want to trade this market? Fine. You better know what you're doing. Learn how to sell options, not just buy them. There is a lot more to trading than just buying options. I am a net seller of options 99% of the times these days. Okay, learn how to do these things. I outline all of this in my book, A Not So Random Walk on Wall Street. You can get that right off of my website, traderschoice.net. All right, people, look, I'm going to end this video. This guy here loves you a lot. It's Friday. I'm going to leave you off with my favorite 3 things, okay? Love each other, care about each other, be charitable. I believe you're going to hear from the crypto kid tomorrow. And I didn't talk to him yet, but I'm sure it's going to be interesting. And you'll hear from me on Sunday for my markets to look ahead. I'm out of here.